Hey, how's it going, all? Just want to do another. This should be relatively quick. I just want to do a video on interest rates, and so you're gonna see that more and more in the news if you've been following. It's already there, pretty big discussion point over the years, especially with the '08 housing crash and mortgage rates and how they're related to like central bank policies and the rates that they set, the interbank lending rates, and how those rates actually dictate everything going out. And so I've done videos on that, more detailed, just what the central bank interest rate setting mechanism is. But this is more of just a sort of a qualitative kind of discussion on interest rates, and that why the actual number that they're set at is extremely important and dictates really everything in society. So people who say, don't worry about money and all that. And I was on a hangout last night where everybody's just kind of on the baller side, especially, or like, evil is just in the ego and like all this kind of stuff. And like even Vegan Warrior, I was on his hangout and he was talking about, why people are evil. And it's just because, of dysfunction, that we only sin because there's, everything is functional except when people sin and it's dysfunction or it's the state of unconsciousness or something like that. I was just, oh my God, is this happening? So they're just muddying the waters. What's really at the crux of what's going on in the world right now boils down to money. We cannot survive without money, and then we can't live well without a certain amount of it, and having even a cushion. This is just what it is. So people who don't acknowledge that, avoid them. In these days, these are Satanists. These are government shills. They are people in place to support this system, even if they themselves are being crushed. This is the will of God. We would need a lot of people, by definition, to support this financial enslavement and oppression in order to make it manifest, and to sustain it even for a relatively short period of time. And so there's a lot of people like that. But this is at the heart of it. So and I want to boil it down actually to almost these rates, and it's incredible how much power the central banks have just by literally setting one number, and they can set it to whatever number they want very, very easily by dictating, the interest rates that are charged between their network of banks, and then that number flows out to us, in terms of student loans and mortgages and car loans and all that kind of stuff. But so fundamentally, when an interest rate is set, and you're seeing more and more stuff in the news now that the Fed is reducing interest rates, and so we had what's called ZIRP, like zero interest rate policy, for a long time, particular after the '08 crash. The central banks just kind of infused more and more credit into the system through zero interest rates, essentially just pushing out quote unquote free money or close to free money, to allow corporations to exist, and not burdening them too much with high interest rates. And so that's been happening for many, many years. But there was a gradual increase, and I think it was around 2 or 3%. It's around 2 or 3% now that the central banks have set, their interbank lending rate. And then but now that there's more and more kind of consensus that the global economy is slowing down, you'll see more and more people, speculating, pontificating, hypothesizing, prophesying that the rates will actually start going down and going back to this quote unquote zero interest rate environment. And that's really one of the last things that the central bank can do to prop up this system. And so 2%, to me, just the number alone, if we imagine 0% interest rates, means that essentially like money is just given out. There's no requirement to pay any interest. You just pay back, whatever amount was loaned out. So the bank will give out $1,000 and they just expect $1,000 back, over the course of the loan. And then that's zero interest rate policy. Basically the most quote unquote friendly lending environment. But we're actually noticing now in some places that, it's getting even more ridiculous, where we are seeing negative interest rates in other parts of the world. Not yet here in the U.S. But what that means is that people will give out like $1,000 loan, and they will actually pay the person a small amount per month. Let's say it was like -1%. Then the person who's taking the loan will actually get a small amount, quote unquote, back, like as a discount for taking a loan. So they obviously still have to pay the $1,000 back, but they will get, a small amount of money every month, depending on the duration of the loan, as sort of an incentive to take out a loan. So it's kind of like pushing credit even more out into people, into their lives, and to sort of what their hope is that the more the lower the interest rates go, even in a negative territory, people will be more inclined to take out a loan and then spend more. So it's a way to sort of artificially stimulate the economy at the personal level and at the corporate level. And so, negative interest rates exist, in certain parts of the world right now. And so 0%, like I said, is just you just bank gives out a loan and then expects that money back, over a certain amount of time. And then, we're in about a 2 or 3% environment right now. And then the major problem with the interest rate being low and obviously going negative is a big problem, is that it just ensures that when people are given money, let's say there's a finite pool to lend out, and it's not really actually finite these days because people, banks are just printing more and more money, expanding the credit supply daily, which is another topic that is bad, because they're diluting the amount of money that they loaned out yesterday with new credit that's created today, and that's bad for all of us. But the major sort of negative effects of having interest rates too low is that there's no discretion in what is done with the money. It's like if interest rates are set very, very low, people just will take money out and just go buy things that they don't necessarily need. And then corporations will take money out, take loans, and be involved in activities that are not necessary, or important for the economy. And so then you'll get, companies like Instagram, and Facebook, and all this stuff going on in Silicon Valley, all these apps that are being created, and money is being pushed, behind them, and then that's what happens. You just get people spending quote unquote money or credit on things that are not necessary. And so it's one thing for an individual to do that, but even more worrisome is when companies have that sort of access to credit, to easy money, and then they'll get involved in businesses that are not necessary. And then the problem is that if those businesses exist and then individuals, have access to credit, they can only, get stuff that these businesses are offering. And so the first layer is that businesses will be set up and do things that are not useful or necessary. They're not going to be tied to like food, quality education, health, all that kind of stuff. Those things obviously will exist to some degree, but that will be a relatively small portion of the quote unquote economy. And we see that in America. I mean, most of the stuff that's out there now is, retail, restaurants, it's related to food for sure, but even just like leisure, sports, entertainment, and all these kind of other things, even travel to some extent, like, aspects of the economy that are not necessary for day-to-day, sustained life, become a bigger and bigger chunk of the economy. And that's bad, and so the whole, all the channels that the money has gone through, to create different businesses and corporations and all that, are not necessary. And so I would say a great deal of them, possibly 75% or more, of the companies that exist in America do not provide something that is necessary to, maintain human life. And so that's the situation that we're in. To me, this is by design. This whole system, in my opinion, has been set up to fail. And its needs, and my whole point of this entire video is that it needs low interest rates, because if their interest rates are much higher, let's say interest rates are set at 10 or 15 or 20% in a sustained period of time, that means that a person who takes money out will have the requirement to pay back, obviously the principal amount, but also the interest payments will be substantial. And so they have to go out and do things that are actually useful and necessary, just because the interest rate requirement is so high. And so it's the same with, purchasing things. I remember my dad telling me when we bought our house in Canada, the interest rates at that time were, I think, around 10 or 12%, to get a home. And, the cost of the house was much, much cheaper at that time because the money supply was not as vast as it is now. But, that ensured that people who take the risk, quote unquote, risk to buy a house, had the ability to pay for it, and they would not do it until they were set up in a position to, take on that debt or that mortgage. And so, I'm not here to say that even, interest is virtuous, because the Bible does speak out against it, that the whole concept of printing new money and then charging interest on it is satanic at its core, because the people that are printing the money do not do anything to, quote unquote, earn that money. They're just pushing a button and adding to the, credit supply, and then charging people for literally just pushing that button, and reaping incredible rewards from that. So the whole system is satanic. But I just want to give some sort of intuition on why the interest rate being so low is so dangerous, and creates all these distortions, but just fundamentally creates an unhealthy economy, because like I said, you're then promoting people going out and doing things in a more short-sighted sense. They're not required to do anything useful for people and in a sustained way, because the hurdle of repayment is so low with low interest rates. And so that's the situation that we're in, that it's pretty much a consensus now amongst, financial pundits, that the interest rates will have to be reduced, even from 2%, which is extremely low. And so to me, this is the major inflection point that will happen at some point soon, probably this year, where once the central banks, in particular the Federal Reserve here in US, starts taking the 2 or 3% rate and dropping it close to zero and potentially having to go negative, to me is just what's going to happen is it just floods the system. It forces everybody to push their money out. Once interest rates are that low, and it potentially, like I said, if they go negative, it gives people an incentive to take out more and more loans, more to take out, more, to have more and more credit burden, and it just sort of will push money out into the system, and that to me will lead to hyperinflation. And then the Bible prophesies in America there will be famines and all that. So I think that, again, no one knows exactly when this will happen, but it just looks more and more like this is the setup that is happening right before our eyes. Because for a country to not be able to go higher than 2 or 3% interest rate without, it collapsing, means that, it's walking on very, very thin ice, and so if you can't operate in a healthy way above 2 or 3%, means you have a lot of companies out there that are completely useless, that if you burden them a little bit more with a higher debt burden, higher requirements for returns, they will not sustain themselves. There's a lot of companies that are burning cash every month, and are not even making money yet, like Uber, Lyft, and Netflix, and some of these companies are not even cash flow positive. So they're only sustained by debt and a low, quote unquote, encumbrance of low interest rates. So, this is more and more evidence, in my opinion, that this system is completely unsustainable, and that we're living in the end times, because everything that's set up now, even just the whole construction industry and, creating, homes and apartment buildings and commercial complexes and stuff, that's unsustainable, because all the companies that are filling those buildings potentially are not useful and needed, in the long term. And then so, the system in place is designed to sort of unravel. And then if people don't have jobs, then they're not able to buy, anything residential, or even pay for their own rent. And so that whole industry will just get dried up. And so, there's no emphasis on food, first of all, creating an environment or, a place where, the major part of the economy is growing and distributing healthy food enough for all people in a sustained way. That's probably outsourced to a large degree for us here in America. And so, we've just gone away, very, very far away from, the core needs of the people. And to me, this is by design. This whole system is purely driven by technology optimization, work, increase profits, and all that kind of stuff. And to me, it's an unquenchable system that is continuously seeking profits, and then will do whatever it needs to do to maintain that. And that's layoffs and cut costs and cut corners and all that kind of stuff. And so the issue with that is once you cut too much and have layoffs happening above a certain amount, those people then are not able to buy stuff. And so it's sort of like a trickle down snowball effect in the economy. Even like car companies laying off people means that those people that they lay off were likely to not buy the very cars that they're planning to still produce. And then, that just creates like a downward spiral. And so it's the same with retail. It's people say, well, closing retail, somebody else will go in there and fill it in. But if they don't fill it in right away, and the people that are laid off, especially people who are working hourly, are more dependent on those salaries to maintain their life, they're not going to be able to buy things that are not necessary for human life. And then they may not even be able to pay for things that they need, like their rent and basic food and healthcare and all that kind of stuff. So I think we're in that position. I don't think it will take longer, definitely not longer than 5 years for this to become noticeable, like even more noticeable than I think it already is for a lot of people. But, I think we've reached that inflection point. I think the economy in the US was like tangibly slowing down at the end of 2014 when we had that oil sort of scare and a lot of layoffs happened here in Houston. I think that was sort of the major inflection point from that point forward. And now we're just seeing sort of like the tail end effects, where the very last group of people, the central bank that can quote unquote save this economy, are running out of things to do. They are at 2%, which is very, very close to zero. It's different if they were at 15% and they needed to reduce it a few percent to kind of stimulate, and they had from 15 all the way to zero to work with. They have from 2 or 3% to zero, and then that could potentially happen on the order of a couple months when it starts getting, panicked, and then going to negative would just be the only other option. And then to me, that's a situation that they call stagflation, where it's like you have money being pushed into the system through inflation, and then you have a stagnant economy where the GDP is, in a recession, where you have, reducing negative GDP growth month over month and in a sustained way. Then they'll define that as being in a recession. And then if it's prolonged, it turns into a depression. And so, I don't really see any other way out of this, just because the entire economy, a majority of the companies, like I said, are not needed to sustain human life. Hope everyone's doing well. Bye.